What if the future dollar isn't issued by the Fed but by a crypto company? Welcome back to DCA Crypto, where we break down complex crypto stories with clarity, logic, and clean visuals. Today, we're talking about something much bigger than a stablecoin. We're talking about the future of money and how USDC, Circle, and the stablecoin wars may shape the global financial system. This is not hype. This is happening right now. Imagine a world where dollars move as fast as the internet, where sending money is as simple as sending an email, where businesses can automate payments, payroll, and lending instantly. This is Circle's vision for its stablecoin, USDC, a programmable dollar that works everywhere the internet works. So, what exactly is programmable money? Unlike cash or traditional bank wires, which are slow and clunky, programmable money is built for the digital age. It runs on blockchain rails, allowing it to settle transactions 24/7, not just during banking hours. It can be integrated directly into smart contracts, unlocking new forms of automated finance. It can even power AI-driven financial systems, and most importantly, it can move anywhere in the world at near zero cost. USDC isn't just a token you trade, it's Circle's ambitious attempt to build internet-native money from the ground up. And this brings US to the global stablecoin war. Stablecoins are no longer a niche crypto asset. In fact, they now settle more transaction value each year than payment giants like Visa. The race to become the dominant digital dollar is on, and the battle lines are being drawn. First, you have the government-led initiatives, CBDCs, or central bank digital currencies. Governments around the world want to create their own digital currencies to maintain control. China is already pushing its ECNY. Europe is actively testing a digital euro. And the US is still thinking about it. But CBDCs face a major problem. They are slow to launch, often bogged down by heavy regulation, and generally lack the innovative spark of the private sector. This is where the real competition heats up. Private stablecoins. In one corner, you have USDC, known for its compliance-first approach, transparency, and appeal to institutional investors. In another, you have Tether, or USDT, the undisputed liquidity king, especially popular in emerging markets. And now, a new giant has entered the ring, PayPal with its Pyst, backed by one of the largest fintech ecosystems in the world. Each of these contenders is fighting for the same ultimate prize, to become the default digital dollar for the entire world. And here's the twist, the winner of this race may not be a government, but a company. Everything changed when Circle announced its plan to go public through an IPO. This isn't just a business move. It is a strategic play to legitimize a crypto-native asset in the eyes of the traditional financial world. If Circle becomes a publicly traded company, USDC instantly becomes more audited, more regulated, and more transparent. It gains a level of institutional trust that few crypto assets have ever achieved, setting the stage for global scalability. An IPO means USDC steps into the same arena as major banks, payment giants, and fintech titans. This isn't crypto versus traditional finance anymore. This is crypto merging with traditional finance. With this level of trust and integration, USDC could become the settlement layer for countless fintech apps. It could become the backbone of global remittances, making cross-border payments cheap and instant. It could serve as the default currency for the entire Web3 ecosystem. It could even provide the dollar rails for future AI agent economies. In short, it could become the foundation of digital commerce worldwide. This brings us to the real question at the heart of this entire shift. If the world starts using a digital dollar, who controls it? Will it be governments, maintaining their authority through CBDCs? Will it be the old guard of banking? Will it be powerful tech corporations like Circle or PayPal? Or will it be truly decentralized blockchain networks, owned by no one? The answer to this question will determine the future of financial privacy, the shape of global commerce, and the balance of geopolitical power. It will decide whether we have the freedom to move money without permission. Stablecoins are no longer just crypto tools. They are rapidly evolving into fundamental financial infrastructure. And if USDC succeeds in its mission to become the world's programmable dollar, its parent company, Circle, could become one of the most influential financial institutions on the planet. So what's the lesson here? The future of money is being built today, and the race is wide open. Whoever controls the stablecoin standard controls the future of money. If you enjoyed this clean, educational breakdown, make sure you subscribe to DCA Crypto, where storytelling meets crypto intelligence. See you in the next episode.